Earlier, we made a video about J. Law's strategy, the Hong Kong teacher who won the U.S. investing championship twice in a row. We coded his pullback recovery rules, ran them on every Nasdaq stock, and got 29.6% win rate. Profitable through asymmetry, not frequency. But we asked, can we find a stronger version? So we built an AI loop to evolve the strategy. 17 generations. Claude Code wrote every mutation. And when we measured the holdout data nobody had seen during development, 73.6% win rate, 246 trades, 2024 and 2025. This is what the loop found. Here is the strategy we started from: J. Law's pullback system. Rule 1, confirmed uptrend, price above the 200-day moving average, 50-day above the 200. Trend intact. Rule 2, wait for the pullback, let the stock dip back to its 10-day EMA, do not chase. Rule 3, buy the recovery. Price crosses back above the 10-day while still holding the 50-day support. Trend, pullback, recovery, the multiple edge combined. Rule 4, risk control, a hard 8% stop on every trade. Exit when price closes below the 20-day EMA. The result, 29.6% win rate across 17,000 trades. Profitable, winners average 7%, losers capped near 2%. But we thought we could do better. So we fed the rules into an AI evolution loop and let it search. Here is how the loop ran. Step 1, mutation. Claude Code writes a new version of the entry rule. New indicators, new thresholds, dozens of variations per generation. Step 2, the evaluator. Every mutation runs on in-sample data only, 2015 to 2020. The evaluator never sees validation or holdout, no peaking. Step 3, the fitness score, 60% weight on expected return, 20% in sample, 20% win rate. Out of sample weighted 3 times heavier to prevent overfitting. Step 4, the quality gate. Win rate must exceed 45%, at least 20 trades. Expected return positive. Fail the gate, discarded. Step 5, survivors mutate. Top strategies from each generation spawn the next. 17 generations later, the validation period selected the champion, and the result was unexpected. The winning entry was not an EMA crossover. It was a deep monthly dip, RSI below 35, monthly return below negative 15%, inside a confirmed uptrend. A completely different trigger, a much higher win rate. 3 periods, 3 independent measurements. In sample, 2015 to 2020, 69.0% win rate, plus 3.89% average per trade, 258 trades. Validation, 2021 to 2023, 79.8% win rate, plus 6.20% average, 282 trades. Holdout, 2024 to present. This is the data nobody touched during development. 73.6% win rate, plus 5.91% per trade, 246 trades. The numbers held across 3 separate windows. Not luck. Structural edge. Average winner, plus 10.7%. Average loser, minus 7.5%. Winners are larger than losers. The math works. Every month, Backtest Lab runs our strategy across the entire market. 10 stocks make the cut. Each one gets a full research report, technical structure, social sentiment, news and macro and fundamentals. Then the following month we publish the verified 30-day returns. Every ticker, no cherry picking. The May issue flagged 10 stocks. The top 5 picks returned between 147 and 241% in 3 months. The letter is on Patreon. Link in the description. This is the distribution of all 786 trades combined, across in-sample, validation, and holdout. Look at the loss side. Losses cluster tight near zero. Average loss, minus 9.2%. They get cut when RSI recovers to 55, early, clean, consistent. Now the right side. Winners stretch out, 10%, 20, 30, and beyond. The RSI exit lets winners run until the bounce is genuinely complete. That is the asymmetry that makes this work. Subscribe to Backtest Lab. We test a new strategy every single week. Here are the top performers in the holdout period, 2024 to present. ASD Space Mobile, ASDS, 32.7% average return. Robinhood Markets, HOLDOUT, 26.6% average return. EchoStar, SATS, 25.9% average return. B1 Medicines, ONC, 22.5% average return. Nebius Group NV, NBIS, 20.0% average return. High beta names with violent short-term pullbacks inside powerful long-term uptrends. The strategy was designed for exactly these stocks. Now let's look at one concrete example on a chart. Coinbase. Here's how this strategy traded it since 2022. 3 entries. August 2023, Coinbase had crashed more than 27% in a month, still above the 200 SMA. RSI collapsed below 35, entry at $73. RSI recovered to 55 11 days later, exit at 85, plus 15.7%. August 2024, another deep dip. Entry, -5, 1 controlled loss. August 2025, third signal. Entry at 298, exit at 324, plus 8.7%. Buy and hold on Coinbase since 2022, up 5.8% in 4 years. The strategy, up 19.5%, 3 selective entries, same stock, very different outcome. $10,000. Strategy in green, buy and hold in gold. Both starting January 2022 on Coinbase. Buy and hold is up 5.8% after 4 years. The strategy is up 19.5%, not by holding. By entering at extreme fear, RSI under 35, monthly return below -15%, uptrend intact and exiting cleanly when RSI recovered to 55. 3 trades, 2 winners, 1 controlled loss. Total time in the market, under 40 days. The rest of the time, cash, 0 risk. Across all 500 Nasdaq stocks, the same discipline generates 5.9% average per trade in holdout. That is what edge looks like when you measure it honestly. We broke all the trades down by sector. Consumer staples produced the highest win rate, 87.5%. Utilities came second at 86.4%. The weakest sector was telecommunications at 66.7% win rate and plus 5.80% average return. By average return per trade, utilities led at plus 8.45% per signal. The pattern is clear. Deep dip mean reversion works best in high-momentum sectors where temporary dislocations are punished quickly. It works least well in defensive, low-volatility sectors where drops tend to be structural, not temporary. 3 periods. 3 honest numbers. In sample, 69.0% win rate plus 3.89% per trade. Validation, 79.8% plus 6.20% per trade. Holdout, 73.6% plus 5.91% per trade. The edge held across all 3. First caveat, survivorship bias. Stocks that delisted between 2015 and now are not in this data. Real results are slightly lower. Second caveat, no commissions, no slippage. Subtract 5 to 10% for real-world execution costs. With those adjustments, the edge is real on the right stocks in uptrends when the dip is genuinely extreme. Subscribe, like, and leave a comment. Full ticker results and the Backtest script are on Patreon, link in the description.